Hello, Mark Sturdy here with a brief summary of our work this week, looking at 7 days, looking at major world markets, and you'll see that we remain bears of the dollar in all time frames, bulls of the euro. We are bulls of the S&P 500. We are bulls of the Nikkei. We are fascinated by what's going on in bonds, but nonetheless have waited to wait for clarity in the short-term situation, even though we think yields look set to go higher. There are very important levels that we must look at, which I will refer to, and were otherwise flat. Let's look at the dollar euro as we normally do. First of all, this is the reasoning that we want. We think the euro goes stronger and the dollar weaker, and this is the amazing support beneath the market. 3 bounces from the band of support for the euro from the prior highs. So although it's not a compelling thing, some more cautious people might want to break for 118.48. Nonetheless, for that, the recent bounce off 116.39 suggests this goes higher. The trend is in place. Worth looking at the dollar yen, which we think the big picture is very clearly for a weaker yen, breaking up through this prior high, the completion of this triangle. But the recent market failure around 158.87, the pullback, suggests there's greater confusion in the market, so we are not taking a strong stance there right at the moment. Moving on to stocks. Well, the S&P 500 is the long-term bull market. It is the bull market that's bounced off prior highs and has bounced through has pushed up through its recent all-time high. It is going great guns, and it is a strong bull market that wants to go higher, as is the Nikkei, having broken up through the 1980s prior high 39,600, having done so with a catalyst of a triangle that sent it up at least as far as higher recent levels, and has recently broken through 59,420. A tremendously bullish price action. When it wanted to sell off, it found support exactly where you'd think you'd find it, which is the nearest prior high, and bounced like the S&P. The bullishness is not true of the Eurostoxx 50 or the FTSE 100. Eurostoxx is supported by, while it stays above the high of 2000 back 55.24, it's still above there. But this cautious price action, unlike the US and the Japan, unable to break back through prior highs, means to say that they are less exciting, the Eurostoxx and the FTSE, similarly unable to break back through the recent prior highs, unlike the US and Japan. So we're standing clear of those. Bonds are fascinating. We have on the one hand the gilts, which looks to be set up for, well, it's very vulnerable, I think is the low-key way of putting it. Others would be much more bearish. Completion of this triangle, the breakdown through the prior low, means there's tremendous resistance above the market to any sort of bounce in prices. And yield-wise, well, we have this situation of a massive bull triangle which has yet to break. But were that to break, which is, as I say, is about 5.2, we think we move on up to 7%. So that is a disaster potentially for the gilt. We would, I think, point out very short term there's some uncertainty. The market's bounced twice price-wise from 85.91, and it needs this level to break for the bears to really get their teeth. So watch for a break of 85.91 in the gilts, or a push up through yield-wise of 5.11, 5.11, before the market really gets going. So pause and watch those levels carefully. You'll find that the US note is very boring in comparison, big trading range, long-term, medium-term, and short-term, not terrifically bearish, marginally bearish. And the Bund is somewhere in between the gilt and the Treasury note in terms of long-term looks bearish, having broken above these major highs in the past, 2025, 2023, having pushed up through these resistances from 05 and 010 by the looks of it. That's the long-term picture, but short-term it's the middle of the trading range. Stand by. Oil, dull. Has to break through here before it looks bullish. Big trading range in the middle of. Gold, similarly, gold, tremendous bull run, been going sideways since December, has some support, not clear. Thanks very much.